I think the most interesting aspect of this is despite the recent activist campaign, Texas Instruments is staying strong with their strategy of cutting prices a bit in China to continue to fight off the new Chinese fabless players that are cropping up to try and make analog and trailing edge semiconductors. And this is letting Texas Instruments, keep a strong share in the EV sector where many companies such as BYD are trying to make their own chips. So I think that's the most interesting aspect is they're staying strong in their strategy despite the activist campaigns.
So let's get to that, right? You're talking about Elliott Management here. Took about a 2.5% stake in TI. Do you think they're happier right now?
I think that, when you look at Texas Instruments over the last decades, you see them having been a fantastic, dividend and buyback player, right? And Texas Instruments strategy now is completely different, right? It is, hey, we're going to invest a lot in upgrading our fabs to drive down our cost structure long term. But in the near term, that means we're not going to have a ton of cash flow to drive back into buybacks and dividends, right? They're not going to do a ton of buybacks and increase their dividends. And this is so that they can maintain competitiveness and have a cost advantage versus Chinese players that are cropping up. But in reality, like this may be the correct long-term move, but I don't think Iliad, what they want is not necessarily this. They want Texas Instruments to actually just not invest a ton in new fabs and maybe don't cut prices too much, right? Because in the short term, that's actually bad for cash flow.
All right. Now, the fab they've got going, the new fab they've got going stateside, though, I mean, I think this is probably true. And tell me if you disagree. Regardless of who wins the elections, right, this whole idea of supply chain security, national security as well, the fact that they're investing at home is probably a positive, yes?
Definitely for the U.S., interest, this is a positive, right? It's no secret that fabs are cheaper in Asia, but by the leverage of the CHIPS Act, right? There's a few components, right? There's the actual direct money granted to fabs, which Texas Instruments has not gotten much of, but there's also the tax credit, right? And Texas Instrument, as a company that pays a ton of taxes, is getting a lot of tax credit, right, for purchasing equipment and deploying it in the United States of America. And therefore, that's equalizing the cost and, in fact, making it more advantageous for them to build fabs in the U.S. And so this is what's driving them, partially to do this massive upgrade cycle from, to build new fabs that have lower cost structures versus their old existing fabs. And then also insourcing more production from Taiwan Semiconductor.